Today, we're going to go over how you can use a 1031 exchange to defer capital gains taxes on a mixed-use property. There are a few things you need to know first. A mixed-use property is one that serves both personal and investment purposes. Common examples include a duplex where you live in one unit and rent out the other, a vacation rental that you use part of the year while renting it out the rest, or a commercial building with a storefront on the bottom and an apartment on top. These properties present unique challenges when it comes to 1031 exchanges, especially when determining what portion qualifies for tax deferral. For a property to qualify for a 1031 exchange, the portion of the property being exchanged must be held for investment or business purposes. The personal use portion does not qualify. This means that you sell a mixed-use property, only the investment portion is eligible for tax deferral, while the portion used personally may be subject to capital gains tax. Understanding this distinction is crucial when structuring your exchange. Since mixed-use properties have both personal and investment components, the IRS requires you to allocate the value between the two. The portion used for business or investment can be exchanged tax deferred, while the personal use portion is taxable. For example, if you own a duplex worth $600,000 and rent out one unit while living in the other, only $300,000 of the investment portion qualifies for a 1031 exchange. The remaining $300,000 could be subject to capital gains tax. This is why accurate valuation is key, and working with an appraiser or CPA helps ensure the right allocation. Vacation rentals are a popular type of mixed-use property, but personal use must be limited to qualify for a 1031 exchange. The IRS has a safe harbor rule that defines whether a vacation rental is considered an investment property. To qualify, the property must be rented out for at least 14 days per year, and personal use cannot exceed the greater of 14 days or 10% of the total rental days. If personal use exceeds these limits, the property will not qualify for a 1031 exchange. Navigating a 1031 exchange with mixed-use properties requires careful planning and an understanding of the tax rules. Given the complexities of value allocation and IRS requirements, it's essential to consult with a CPA or tax advisor to ensure your exchange is structured correctly. Proper planning can help you maximize tax deferral and keep more of your investment working for you. A 1031 exchange can be used for mixed-use properties, but only the investment portion qualifies for tax deferral. The IRS requires value allocation between personal and business use, and for vacation rentals, personal use must be limited under the Safe Harbor Rule. Given these complexities, working with a CPA or tax advisor is essential to ensure compliance and to maximize the benefits of your exchange. If you have any further questions on how a 1031 exchange applies to mixed-use properties, feel free to give me a call. Thanks for watching.